Most people search for the best stock trading app as if there is one universal winner. That is the wrong frame. In 2025, the real choice is about what job you need the app to do. Because the broker that feels great for simple ETF investing can be the wrong one for options, cash management, or fast execution when markets get rough. The search term stayed the same, but the real consumer decision underneath it got much more specific. First, what changed? Zero commission trading stopped being the whole story. What matters now is the stack around it: cash yield on idle money, retirement account support, options tooling, research depth, international access, and how clearly the app shows risk before you press buy. That means the comparison moved away from marketing claims and toward workflow fit. For a retail investor, those surrounding details often matter more than the headline fee that gets used in the ad. A trading app is not just an interface decision, it changes behavior. Friction changes how often people invest. Poor risk controls change how aggressively they trade, and weak cash handling can quietly drag returns when money sits uninvested. The wrong app can look cheap on the surface and still cost you in spreads, idle cash, or bad habits. That is why the best app for a beginner is often the one that lowers temptation instead of maximizing activity. Now the evidence. That is why the right answer is usually a short list, not a single champion. Some apps win on simplicity for beginners. Others are stronger for serious charting, options chains, or broader account support. And some look free until you notice payment for order flow debates, wide crypto spreads, or limited tools once your investing gets more complex. The trade-off is usually convenience versus depth, not good versus bad. So what should creators do with that? If you are building slowly with ETFs and recurring buys, choose the app that makes saving and staying invested easy. If you actively trade, pay up for tools, execution context, and better risk visibility. If cash management matters, pay close attention to sweep features and idle cash treatment. And if you want access to newer market products, understand exactly where the extra risk begins. In other words, choose for the behavior you want to reinforce, not the feature list that sounds the most exciting. The cleanest way to read this market is to ignore the universal winner narrative. Check what happens to idle cash, how clearly the app shows risk, and whether the toolset still works once your investing gets more serious. Also, pay attention to what the app is quietly optimizing you to do every day. Good investing software should support discipline, not constant stimulation. That is usually where the real ranking starts. The bottom line is simple. No single stock trading app wins for everyone. Choose the broker around the investing job you actually need to do, and make the hidden costs visible before you scale up. That is the difference between a useful tool and an expensive habit. The best choice is usually the one that keeps your plan intact when the market gets noisy, boring, or unusually tempting.